Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, that's opened up with gains of almost 1% in the trading session today.
The good thing is, as we wind down and go into the weekend, all of the news flow which caused this turbulence in global markets is settling down.
We have a very stable operation now and obviously start to prepare for the month of February.
Government focus on capex infra is really very high, and we are seeing huge investments coming.
25,300, so it's now gone flat. 20-point change. The Nifty Bank is up 0.2, 59,300.
It will not be very significant uptick, but definitely there will be signs of improvement in terms of earnings trajectory, at least for the large caps and certain mid caps in our view.
Fairly volatile week that we've seen, where we've tested lows of sub 25,000 and also highs of closer to 25,450.
Net interest income that declined by 5% on a year-on-year basis, almost in line with the street's expectation.
The president of the European Union, Antonio Costa and Ursula von der Leyen, you'll see them traveling in a buggy along Rajpath on Republic Day.
Across the board, there's major selling which has come by mid-caps. They are underperforming, and Bank Nifty too is down 0.9% as we speak.
Well, we're starting closing bell, 10-15 minutes early. Welcome to the program. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel. Nigel, hi.
Well, hi, Prashant. I think all through the week, we have been lowering the support on the Nifty. And at least I think as of close, if we can support that, the 25,000 odd mark, I think the bulls at least will feel good, because the fall that we have seen, which started at around noon, it's got a little bit deeper, and there's only one stop loss now, 330. Just take a look at the way we're falling.
You're right, and it would be funny if it was not so tragic what's going on.
But at least I think actually we went down to 25,020 odd, and we've seen at least some kind of stability that's coming in there. Otherwise, it was a very sharp fall that we saw 132 around 2 p.m. and individual stocks have fallen off the cliff. So hopefully the breadth of the market doesn't go even worse from here, because the number of stocks declining are way more than the number of stocks advancing.
Look at that. I mean, a point change from the day's highest point. So let's just do one thing, right? Can we put the rupee up, please? The rupee and the Nifty together on one screen. And I think what is happening to the currency, I think perhaps also sold in a way predominantly. I mean, it's of course incredible, because what's happening to the currency essentially goes against what's happening globally. I mean, it's a study in sharp contracts. So that's a Nifty. So as it's almost exactly, you can map it, right, in terms of time. The rupee started going up at about 115 or so, and around the same time is when this collapse on the index has happened. I think we were down about 70 points or so till that point, and another 130 odd points, 140 odd points coming as the rupee started moving higher sharply. Now, if we can, I don't know if you can show the dollar index, but the dollar rupee versus the global dollar is, again, that is a complete contrast. The big global narrative is one of dollar weakness, not dollar strength. Last night, for example, the dollar index, the broader dollar was down. There you go. It's up nothing, right? I mean, 0.13. It was down 0.5% last night. I mean, if you just look at the dollar index, say, if you're able to pull up a chart right on the screen for the last, say, 10 days, 15 days, you will see what I'm talking about. The dollar index has been weakening. It's not been stronger. So this is local headwinds more than anything else, which is at play here. Very India-specific in that sense. So, and it's a very sharp dichotomy, contrast, whatever you want to call it, at this point in time. And I think the new records, of course, being breached right there, 95 now, 91.95 against the USD. I mean, day before yesterday, it looked like maybe the RBI stepped in at about 91.70, 91.72, 73, and 91.80 seemed like a bit of a resistance zone for the dollar. Well, all that's been taken through. And what a week this has been. What a 10 days it has been in terms of what we've seen. There you go. I mean, that's the picture as things stand right now. 240 odd points, and there's a general sense of panic, whatever you want to call it, as far as broader markets on the stock markets are concerned. But I think we want to address the rupee in some detail in terms of what's going on, what's the mood, sentiment, and what's the chatter, if there is any. Lata is here with us in the studios. Lata, what are you picking up?
Well, actually, it was off to a very steady start. The rupee closed yesterday at 91.63. Early morning trades were at 91.50. So actually, the dollar was cheaper by about 15 pies in early trades. And it seemed like that up until noon. One is normally worried about fixing, which happens around 1 o'clock when the month ago NDF trades mature, the swaps mature. But, even after 1, it was a sea of calm in the currency markets with, basically yesterday's levels holding. There seems to be a selling post in the afternoon trades. Now, it is difficult to say whether the rupee triggered this stock fall or the stock fall triggered the rupee fall. We often used to say in days of yore that when London opens, there can be a seminal shift. So it's possible that with London markets opening, foreign funds came with a bout of selling. Already the Adani news, which was carried in Financial Times, had created a negative buzz on those stocks that the SEC may the SEC may ask permission to send notices, summons. That was creating a negative feeling, but it didn't impact in the early part of the trade. There were even some dealers telling us that actually they are normally people who are custodians and who buy dollars for FPIs, but they did not have FPI demand for dollars. And in fact, it was the public sector banks which were buying dollars around that 130 period. So was it a government payment going out? These things are always explained only at the end of the day after the market closes. But like in the stock market, for the rupee at the moment, there are no levels at all. The stop loss is 330 when trading ends.
Oh, absolutely. Jayesh Mehta is with us. Lata, stay with us. And he's Vice Chairman and CEO at DSP Finance. Jayesh bhai, good afternoon. Good to have you with us here. If you can comment on what is happening now and, what I began by saying, globally, the dollar is actually weak, not strong. And yet you have rupee almost at 92 now.
No, absolutely. So what you were saying earlier, right? Is it the rupee which is getting the equity sell-off, or the equity sell-off which is getting the rupee? And it's actually the equity sell-off, right? And good, I got this opportunity, and I really, really want to make a point, right? We have all been seeing that there's a net negative every day of 2,500 crores, average, 80% of the time, right? And we have all the stories given by every expert. No, India valuation is high, there is no AI story, blah, blah, blah. But these are all people are explaining the net thing, right? The real thing is when you look at the net number and when you look at the gross number, it's like 15,000 crore purchase, 17,500 crore sale. 10,000 crores purchase, 12,500 crores sale, 20,000. So there's something else happening, which I don't think any of us know. Even I don't know. What is it? Like, is it HFTs? What is it, this outflow coming? If it is negative story on India, the market price every good and negative news in 5 days, right? It does not drag for 5 months, 6 months, right? There's something more happening, which only if you see the data, only if exchanges know the data, only regulators would know it. Maybe unless you spice that out, there's no point even for RBI to defend dollars.
Right. Jayesh bhai, are you saying that, you're making 2 points. One, that it's the dollar rupee is influenced by the relentless foreign sell number, which is every day, right? Yep. And you're saying that you're highlighting how that daily sell number is happening. The gross numbers are very large, and there you're saying it may be HFTs. We don't know. The Jains, the Citadels. Is that what you're suggesting? It's possible?
Yes. Because, you see, the narrative which we are talking about, right, is like, we don't have AI, India, valuation is high because of local retail money, all the story which we have heard for the net negative number, right? But that's for the net negative number. I can understand that if it is 500 purchase and 3,000 sale, right? But not 16,000 purchase and 18,000 sale, right? Which is a regularly task. So look at the gross number, find out what is happening, and then you tackle it out, right? If it is a macro sell-off, then you can't do anything about it. If there is something more, then you should take
You're saying this is in a way, you feel this is kind of targeted.
This is something different. So I don't know what it is, but it is very, very different. It is just not.
But the point, Jayesh bhai, still is, it is still a number. The problem is exporters are not selling dollars. RBI is, of course, intervening when they feel to smoothen out things, right? But what are they also supposed to do beyond a point?
I'll give you one example. Like, in earlier times when $10 oil used to move, the impact used to be $10 billion over a year, right? This is like 2,500. It's almost like $1.2 billion a week, right? So we are talking about $4 billion a month, right? That's the kind of outflow. It's not sustainable. If it continues, we don't know what it is unless we know what is the issue. And if it was a macro part of it, if it is equity valuation and all that, people would have done it long time back. It cannot keep on dragging.
No, but Jayeshbhai, the point is there is still that number coming, right? If
yes, absolutely.
Yeah,
absolutely.
that is the whole point. And if people on the other side felt strong enough, I mean, there would be buyers as well in that sense, wouldn't there? On the equity side,
gross buyers. So on the gross number, there are 15,000, 10,000 crores buyers every day. I'm just talking exchange numbers, right? Every day. So I think there is something more. I don't know the answer to it, Prashant. It's equity market, but regulators need to really see the numbers. What kind of people buying? What kind of people selling? What is it? Rather than just saying, though we don't have an AI story, that's why people are not investing in India. Oh, India valuation is high, that's why people are not investing in India, right? Yeah, that's the few standard stories which we have heard, like why FPIs are not investing in India. But I don't think, because if that was the situation, they would have done it long time back. Now, every good news bad news also get priced in 15 days, right?
Yeah.
Or 10 days.
Yeah. No, I get that. Now, in your experience, at a time like this, what does you'd get opportunistically people who would come in as well and pile on. So, what happens from here, in your opinion, Jayeshbhai? I'm not asking you to predict levels, etc.
I was talking to one of the regulators only, right? And you see, they feel that, okay, at some point of time, at this point of time, value buyers should find value. But then please understand, people sitting abroad, right? They are actually thinking, why is it against, DXY is depreciating, but every other currency is appreciating, and why is it dollar rupee is actually panicking, right? There's something more which we don't know sitting 50,000 feet away, right? Yeah. So they are all trying to figure that out, right? So it's not that they are looking, oh, that's now value, let's get into it, right? They are not really looking into that. They are actually getting more feared, right? And everybody have to answer to their investment committee board and stuff like that. And they are also trying to figure it out what to answer internally on the existing position.
Right. Mr. Mehta, but what do you think the central bank can do? Because clearly it's getting excessive, 88 to 92 in this sort of a time span. What are the options they have?
First thing is to find out what is the real thing happening, right? I don't think, I have talked to so many people, and I don't think most of us have any idea. Even I don't have the idea. What is this number daily outflow happening? It cannot happen one way, right? So one has to really look into this data. Maybe both the regulators need to look into this data. What is it? Come out with a concrete thing, and then first you tackle that. Now, if you are going to continue this 2,500, 3,000 crores outflow every day, whatever amount of reserves you use to protect is not going to help.
No, got that. All this, there is this, the day before yesterday also when we saw that sharp move, right? People blamed it on the fixing, the daily fixing, etc. But that's well known, right? The market, the forex market knows it.
Yeah, but these are all narratives, right? And then, what happens when you see the FPI numbers selling, and then your exporters will also not hedge. So anyway, there's a net sale, as long as they don't see the positive number. But the real crux is why is it happening? It cannot happen on a daily basis, right? That is the only point I'm making, Prashant, right? Unless you know that, right? Whatever you may do, you may temporarily, protect it, RBI may come and sell more, but then what happens next day? Again, 3,000 crore outflow, what do you do about it?
Jayeshbhai, somebody I was talking to, right, they were making this point that one thing which is lesser talked about is we all talk about, of course, the spot market. The forwards market is another kind of, the forward premiums, right, are very high. So for a foreign investor borrowing and coming to market here, their cost is some 6.5%. The RBI has done, yeah.
These are all causes and reasons people find, right? Because if you really look at both equity guys, they never come hedged, right? Most of them. Even for the fixed income guys, they actually go long Indian bonds to go long INR. So whenever there is a bullishness on INR, right, that's when you will see, a lot of FPI buying bonds, right? So, from that perspective, it's not a really arbitrage game and all that. That's like cause effect of the thing, right? And we can't not deep enough to absorb that net outflow on a daily basis, right? And therefore, even for a reason, RBI also at some point of time, they need to really assess like how much they're going to spend. Unless you know the reason. Once you know the reason, then you come.
Then you can, yeah.
Thing to do.
Yeah, but since you said you just spoke with the regulator, I mean, are they now looking at this? Are they trying to figure out what's happening?
No, I can give my suggestion, right? It is only up to them what they would do, right?
Yeah.
So it's like it is completely up to them what they would be doing.
Yeah. I'll tell you what, Jeshbhai, and you've sort of told us something which you think, I mean, there's something else which is off, and we will look at this as well here.
I would love that.
At CNBC-TV18, we'll figure out and try and put some explanations. I mean, yeah, you're absolutely right. I mean, the net number is what it is, but the gross numbers on the equity side, both on the buy side and the sell side, seem to be very, very large in that sense. Thank you very much, Jeshbhai, for joining us. So that's an interesting perspective, and someone, of course, who's been in the markets for 30 years and more. 91.91. I mean, it's not. There was a bit of a drop-off which happened to about 91.88, 89, and we've kind of sort of moved right back to those kind of levels. So there is incredible, no dollars, and incredible sort of demand which is coming in. Well, what we'll do is we'll continue our coverage on markets on the other side. I think it's 2:30, a little past 2:30. 190 lower on the Nifty at this point in time. 25,100, just under 25,100 is where we are at. We'll come back. Mitesh is going. Nagaraj Sethi on technicals is going to be with us, and we'll get you some levels, etc. if there are any now in play, and more conversation coming up.
Welcome back. Some signs of stability, at least from the broader markets as well as from the Nifty pack. Shriram Finance, the stock took a sharp knock. We did see that stock now has pulled back, from the day's low. So Shriram Finance should come up for you. Ultratech comes out with a set of numbers tomorrow as well. That's shown some kind of stability. Actually, there's a sharp spike. I think there was a bit of a basket sell that came in at around 1:32 p.m. because a lot of these stocks, they saw very, very sharp downtick and then spike up. Even Apollo Hospitals, the stock was down, I recall. Now it's up close to around 0.5%. Let's find out what's the trade on the index, though. Nagraj Seth, the senior technical research analyst at HDFC Securities, joins us on the show. Hi, Nagraj. That sort of a day, right? Need to take the bad days as well. The bulls seem to be scampering for cover. The bears are on top. What are the levels you're looking at with regard to the Nifty? And, what's the current trade?
Hi, good afternoon, Nigel. Rightly said, market has been a sharp downtrend, no doubt about that. The recent pullback rally seems to have ended somewhere around 25,400. The lower top, lower bottoms on the daily chart is indicating the bears are dominating in the market. There is a possibility of Nifty reaching down to 24,900 levels, even lower also in the coming sessions. The overall broader market pictures, though bounced back slightly in the last 10-15 minutes, the trend remains weak and we are likely to see more weakness in the short term. I have two stocks on the mixed side. Though there are markets are showing weakness, there are some sectors which are showing some rotation and signs of upside momentum in this falling market. And the first one, let's discuss about the short trade. BHEL, Bharat Heavy Electricals Limited, is the one has been continuously declining over the last couple of weeks. Recently moved below the important support of 200-day EMA, somewhere around 255. Currently trading around 243, 244. One may look to sell at this point of time, and immediate downside target would be around 232, and one can place a stop loss at 250. And second one is from PSU banking front. The chartically PSU banking sector has been in a strong uptrend. It has outperformed the benchmark Nifty during its violent times and currently showing consolidation movement. In that, Union Bank is the one. After the stellar result, it has shifted into consolidation and currently made an attempt of breaking above the range movement around 177.78, currently showing some slight weakness. The overall chart pattern is still positive for the stock price, and at the lower levels, it's offering strong supports on the dips. So right now, trading around 173, one can look to buy at this point of time. Immediate target would be around 185. One can place a stop loss at 167.
Nagraj, you were mentioning about the Nifty. The structure is weak. It's punctured. We agree on that. But what are the levels you're looking at? If you have to slide down, what's the first reference point on the downside?
Yeah, if it slide down to below 24,900, which is a recent swing low, there is a possibility it could slide down to the next low of around 24,650 to 24,700 level, which is going to be the next important support on the lower side.
All right, Nagraj, thanks a lot for that. By the way, one of the stocks that we're talking about, Shriram Finance, the reason that the stock has bounced, actually the numbers are not too bad. You have a loan growth of close to 14.6%. So that explains why the stock has moved up. There's a bit of a margin expansion as well. And the steady asset quality improvement does continue. So 3 big points, loan growth pretty good at around mid-teens. You have NIMs that have improved, and also the asset quality has continued, its improvement. So that's why, in fact, that stock has recovered after seeing a bit of a downtake. But Cipla, that's the other number that came in the last hour or so. It's under pressure after reporting its third quarter numbers, which miss estimates. Ekta is going to be getting onto that call, but for the time, she's going to give us a brief insight into those numbers. Ekta, disappointing?
Well, yes, definitely disappointing for Cipla because the street was anticipating around a 7% growth. They've come in with an absolutely flat performance this time in terms of the top line. Margins have come in at around 17%. The street was anticipating at least over 20% in terms of margins also. The profit has been impacted because of the labor law changes, which is to the tune of 275 crores. And the cost of goods sold this time has been one of the highest for Cipla, which has risen 16% on a year-on-year basis. Now, coming to the geographies, which are really the key drivers in terms of the numbers, the US business disappointed. It came in at $167 million. The street was anticipating around $200 million at least for the business this time, despite the Revlimid generic cliff. So that would be important to know in terms of what the pipeline and what the average quarterly numbers would look like for Cipla going forward. India did well. It was up around 10% on a year-on-year basis. So that was a key positive positive for Cipla. But overall, disappointing, you'd have to say, led by the US business as well as these one-offs in the P&L.
Okay, all right. Thanks a lot, Ekta, for that. Well, let's welcome Gurmeet Chadha, Managing Partner and CIO at Complete Circle. Gurmeet, tough times, right? Markets are doing a jig of their own. Everyone's sounding optimistic on India's prospects, but it's not reflecting in stock prices. Since Ekta told us about Cipla, what are you making of the numbers? What do you like from the pharma pack?
Indeed, Nigel. I think also there is probably some fear zone in which, especially in a lot of names in mid and small cap, a lot of stocks are also falling on low volumes. Typically signals the extreme fear zone as far as the sentiment indicators go. And I think somewhere, I think the earnings have not been, at least it's early days, but I think due to the labor impact, there is an impact. At least, if you can broadly put a number of, let's say, 400 crores to 1,000 crores, 300 companies is what the impact is coming in. And then, this continuous supply of FIs, more like a HWP. I was hearing this, right? It's almost like a certain number on a daily basis. So it's all combined. I'm actually a little surprised even on the bond side. The bond yields also been under pressure, despite inflation being structurally low, risk being largely in control. That's another thing we have to. So I think for the markets to stabilize, you need to first see currency and bond markets show some stability and maybe some relief coming on the bullion side for things to stabilize. On Cipla, I think it's a miss. Clearly, and I think in this market, any miss is being brutally punished by the market.
Right. Gurmeet, hi. Afternoon. Just coming to you, I just want to highlight Paytm as well because, this news was flashing at the bottom of the screen. So Paytm has put out a statement that they have other means to mitigate the impact from the lack of, support in terms of a specific, specific amount which not just Paytm but companies across the board receive. This is basically support from the RBI, but I think that expired on the 31st of December last year. Vivek is here just to put this into context, and then we'll just put out what Paytm is saying as well. Vivek, take it away.
Well, that's right. So it's been a very volatile trading session. So the entire news flow is actually driven by the filing of a DRHP by one of the peers of Paytm, which is PhonePe. And this particular DRHP filing was done overnight. So, taking out some of the key points from the DRHP that has actually impacted the entire payment aggregator universe. Number one, what the DRHP says is that the payment infra, that is the PIDF incentives that are received towards the deployment of payment devices from the RBI, this particular scheme that was launched in January 2021 remained in effect till December 31st, 2025. So lack of clarity is there, whether post December 31st of last year, there has been an extension of this particular scheme. In fact, another line in the DRHP states that the RBI incentive was valid until December 31st, 2025. Now, analysts have actually said that this particular incentive scheme is renewed every 2 years by the RBI, and the last renewal renewal was done at the end of December 2023. Now, why is this important for these payment aggregators? Analysts estimate that Paytm managed to generate close to 200 crore of operating revenue via these incentives that directly flow into the EBITDA. Now, like you mentioned, Paytm just a while ago has actually given a clarification to the exchanges after the very volatile moves that the stock has seen. They're saying that if the current scheme is not extended or replaced, the company will make all efforts to significantly offset the impact via higher revenues and more targeted sales efforts. The company has gone ahead and said that the amount of PIDF incentive was close to 128 crore for 6 months that ended September 2025. No announcement as yet by RBI or any authorities on extension or replacement of PIDF. So the entire scenario of events is in the current format, and it'll be interesting to see from RBI whether there is an extension or not.
Yeah, no, absolutely. So, I mean, we've got a fair bit of pressure still, right? 8% lower as we speak. Gurmeet, I'll ask you about Paytm in just a bit, but I mean, just give us a sense of what's happening. It's sheer panic, right?
Yeah, this is what we were discussing, and I was overhearing the conversation of theirs by as well. I think what is also a little concerning is, Prashant, sharp moves in split second, whether it is those HFTs doing it or and we've seen that. Look at yesterday's session, for example. How many times Nifty would have moved up 50 points in 6 seconds. I think so. He was right. We need to probably figure out the cause. And the withdrawal has been very systematic. And I was telling Nigel that I am a little more concerned even on the bond side, despite repo being 525, inflation being structurally low, FIS being in shape. The bond yield is still around 670. The spread is almost like 150. It's like, if the government borrows 20 years, like let's say 680, 690. I'm also borrowing home loan for 20 years at 710, 720. The transmission really won't happen. So the bond yields need to go off, and surprisingly, they are not going off. So I think the proper cause could be known, but there are multiple factors behind this. And I think right now in the market, I think there's a bit of a fear, especially in the small mid-cap space. A lot of shares are falling on very low volumes. Typically, this signals bottom formation. But you can't say that. Sometimes the pain can last another 5% more. But as a portfolio investor, this is not the first time this has happened, and there are opportunities opening up. But I would probably wait for, as I said, the bond and currency to stabilize first before really trying to thumb the table and say that go on.
Yeah, and you need both sides. I mean, this side is looking at that side is looking right back. So things need to calm down. I mean, for example, right, Jayesh is saying, well, look at the equity flows. That's where the problem is. You need to fix that, find the cause. Only then, I mean, there will be some kind of sanity here. But we'll see. Nigel is standing by. How's the F&O positioning changing? What's happening? Nigel, take it away.
Well, the sentiment driver clearly, Prashant, is that Rupee, right? The Rupee weakness is something that we've been talking about all through the week, and there's no signs of stability. That needs to stabilize. Then, in fact, you could hope for a bit of a bounce, because otherwise the technical indicators are pointing to that. Search for some good news and we'll get that much-awaited point. The PCR. The PCR has come down to around 0.68 or thereabouts. But just, first pull up a few charts. Pull up the Nifty with the 200 EMA. Now, in today's closing, you'll want the Nifty to end somewhere close to this 200 EMA, which is ballpark 25,140. Very, very important mark out there. The problem is the Nifty bank, after a while, last 2-3 trading sessions actually started underperforming, because it's not able to get past the 20 and the 50 DMA mark. That's very important. As I said, the PCR is closer to the lower end of the range. By the end of today, it could possibly be at around 0.65 odd, which is the trigger from where you normally see a bounce. But these bounces have become very, very short-lived, and the sell-off actually is more intensified on the downside. The reason the PCR has come down is because the call writers are back at play, with the premium falling close to around 70% on the 25,300 call, 25,200 call as well. The premium is down by close to around 65%. So clearly the writers are having a blast. And on the downside, the 25,050 put, there's a mix of activity, because there was some buying in yesterday's trading session. The premium was 33 rupees. Today, that premium has gone to around 88 rupees. So there is a sense that there is some writing out there, because those writers will be hoping that the recent low of 24,900, that does hold out. Individual stocks in focus, there appears there is obviously rollovers that are taking place, because this is the last day. On Tuesday, we'll have the monthly expiry that will play out. Tata Technologies, that's coming for a bit of a short covering bounce. Vedanta continues to see fresh buying, because that one is getting added on every kind of dip, owing to its exposure to silver via Hindustan Zinc. And Hudco, that's the one that's coming for some unwinding. But on a closing basis, I think we need to get somewhere close to that 200 EMA. But Prashant, I think we got the Laurus Labs numbers, and those look pretty good.
Yeah, no, I mean, it's a 100 crore beat, right, on Laurus. Nigel, thanks for that. On net profits, look at the stock go up about 1.8, 1.9%. Revenues are about 1780 odd crores. And I think on revenues as well, the flash will come back on. I think there is a beat on both the top line and the profits as well. 27% margins compared to a poll of 22.7. So this is actually absolutely blowout numbers from Laurus for the third quarter that we have. Rupee, of course, is all the talk. Geeta Gopinath is professor of economics at Harvard and former first deputy managing director at IMF. And this is her view on the currency.
To understand what's happening to the rupee, I think we have to keep in mind a couple of things. One is that because there was a lot of intervention by the RBI in 2024, the rupee did not depreciate as much as it would have. It kind of went sideways. So a bit of what we saw in 2025 was just undoing that pressure that was keeping the prevent the currency from depreciating in 2024. So it's a bit of catch-up, right? And then there's the other piece, which is the fact that, if you look at Indian equity markets, they've always been viewed as being stretched in terms of valuations. They were more stretched in 2024 than they were in 2025. But you saw a rotation of money out of India back into China, back into other markets, including Japan. And so that portfolio outflow combined with this tension around trade and tariffs with the US, has added to the pressures on the rupee.
Okay, all right. Well, on that note, though, I think we can slip into a short break. We'll thank Gurmeet. Thanks, Gurmeet, for joining in. I think one of the stocks you'll have in your portfolio is Laurus Laboratories. If I remember correctly, I'll had it at some point of time. That looks like a pretty good set of numbers. You know, if you want to comment quickly on Laurus.
Finally, we need some smile. So beat on margins, beat on revenue. I think the export data was pointing to it. But mind you, CDO numbers are lumpy. So the stock very underperformed when we had a full set. So pretty happy it's one of our top 3 holdings.
Got it. Okay, all right. Top 3 holdings. Good on all, Gurmeet. Difficult market, but Laurus Laboratories, at least that's bringing some cheer over here. Margin beat is massive. I remember multiple quarters where we keep pushing Mr. Chava. Why is the margin not coming up? He said it's going to come, and now it seems to be consistent. So good going out there. 350 to around 400 rupees stock, just 12 to 18 months back, has seen a big run. Well, I'll tell you what, slip into a short break. On the other side, we have Stallion Assets, Amit Jaswani, who's waiting for us. We're going to be getting to him in a very, very special conversation. Stay tuned.
Okay, welcome back. Amit Jaswani is with us, founder and CIO at Stallion Asset. Amit is outspoken. He's out there in the trenches, and he's always looking for opportunities. Absolute returns is his style. Amit, but this is a market which has been, and good to see you. Good to have you back on the program. Thanks for joining us. So just first up, wanted to get a sense from you. What's your thinking now? I think it was day before yesterday you put out a tweet, right, with some indicators saying that, well, typically this is the time when markets start to turn and it gets a little better. So, yeah, I mean, just run us through your thinking right now.
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. Prashant, I've just said that what what are the oversold conditions right now? That markets are now exactly where it bottomed on the oversold levels in 2018, 2013, unless we have reached levels of 2008, where banks in the US had gone bankrupt. Oversold indicators do point out that we are coming to the end of the selling phase. See, we've been in a sell-all phase. Good numbers, bad numbers. The shorts have made money selling anything. Actually, if you see the last 15 months where the index doesn't show it, the median returns of Nifty all stocks is around minus 31% for the last 15, 16 months from 1st October till now. It's around 31% negative. So if you look at 2018, that number was around 38%. The number of oversold stocks which are below the 30 RSI, they are now at, typically this is the phase, it's a zone where bottoming happened. But this doesn't mean all stocks will bottom. It means that some will go in consolidative phase. There will be new leaders of the bull market. Every bull market, typically some leaders change. The typical things in a leader of a bull market is these are high growth companies. These are market leaders. And they are basically gaining market share and creating new markets for themselves. And those 15, it's not going to be like a broad rally. I don't think that is happening with a 8.5% nominal GDP growth. The only thing we should not expect is a broad market rally right now. What we should expect is select stocks, narrow markets. Even in the US, the markets are narrow. Only 7 stocks are rallying. Now also in India, there'll be narrow stocks that'll be rallying, and but we are closer. I don't know where the bottom will. Oh, who God knows, unless there's a nuclear war, of course. But we are nearing. First, everyone buys the dip, then they cry the dip, and now, including me, everyone is dying in this dip. So, and we are in that phase.
No, Amit, we will survive. Huh? It's a good day to hear that word. But Amit, Mr. Trump, he is focused on making America great again. I believe you as well have a response to that. What about India?
We need a MEGA. We need to make India great again. And that should happen on the budget day. See, the government and stock market people are right now fully aligned. The government tax cuts, if you see what happened in automobile, when tax cuts of 10% in GST happened, volumes are up 25-30%. If you look at general insurance, like health insurance players this quarter, all of these players will report 30-40% kind of growth. The health insurance guys I'm speaking about here, because that is where the GST cuts happen. And suddenly there's a 30% spurt in growth. So taxation, and that we will see in the consumer durable basket as well. It didn't happen because summer was very poor. But I think the next, this summer season, if the summer is okay, tax cuts have had a very large impact on volumes. So small tax cuts can change the entire trajectory for growth. So that is one story to look out. But we need, this time, I need the budget. Typically, we don't care about the budget so much at Stallion. Like, we do care, but it's not so important. It's like a non-event mostly. But this time, we are on this Sunday. The next Sunday, we would be closely watching what the FM says, because we need something to make India great again.
But they have only so much firepower, right? They've done the tax cuts. They've done most of it. I don't know how much they have in the kitty, but I like that. Let's make India great again. The bulls are saying, where is that? Portfolios are getting absolutely hammered. But you said, you believe that we are more or less towards the oversold zone. And hopefully nothing like the war or anything does break out, any kind of war. What do you like? I mean, it's going to be a very, very selective market. The easy money has been made between 2020 and 2023. So if there is a particular theme, a particular sector that you like, what is it?
So actually nothing in life in markets changes. Broadly, markets for last 150 years has been same only. Market chases growth. You want secular growth. Right now, you don't want to play the quarter over quarter games, because those games will not work. In a bear market, PE or quarter to quarter doesn't work at all. Right now, you need consistent growth for next 3 years. You need to have visibility. See, no one knows what will happen after 3 years, but at least you need to have visibility that this is the place. You don't want to do non-secular things. You want to have secular growth. Next 3 years, 25% should be the growth. And right now you're getting good companies, good market leaders. It has to be a market leaders. Market leaders survive every fall. And then you need to get it the right valuation. Right now you're getting a lot of names. At PEG of 1, your goal should be, if the growth is 25-30%, then 1 year forward it should trade at 30p. If the growth is 50%, then you can buy it at 50p 1 year forward also. So growth will decide what PE we should give, and ROCs, of course, and mostly consumer facing kind of companies, because it's been 15 months of bear market for consumer. We've always done consumer-facing companies, to be honest, but and we don't do. Unfortunately, we don't have PSUs in our basket. We should have had it because PSU banks are now growing faster than the private sector players. And that is, who would have thought that that will happen 2 years ago, 3 years ago, where PSU banks will grow faster. We don't have cyclicals also. But in secular kind of companies, I'll tell you the bottom is very near. You're getting PEGs, companies, good growth companies at less than 1 PEG. And typically my understanding, and not my understanding based on data, this is where the bottom happens. So valuation, we are right. Oversold, we are right. We just need a mega Make India Great Again event to happen.
Yeah, no, absolutely. Amit, I'll come back to the market because broadly, right, you also, you've been around long enough, right? I mean, you want to buy when, yeah, I mean, there's one thing to say, well, buy beaten down names, but you also don't want to be, I know you don't want to be, the way your style is to be completely against the trend, right? Because then, I mean, everything goes down in that sense. Am I broadly right?
So you're broadly right. Actually, we've never gone mostly against the trend. Right now, also the companies that, see, we need earnings trend. Right now, no stocks are doing well. Even good companies with good numbers are going down 15%.
Yeah.
I tell you, one food delivery company came with numbers. Most brokers were expecting 10% upper circuit.
Yeah.
And it opening up 6% was a surprise. But it going down 7-8% was a bigger surprise. And it's down now 13% more. See, these are things that you can't figure out. Like yesterday, if you look at volumes of, let's say, the second largest stock exchange in India, the option trading volume, that is growing at 60, 70%. These are unreal kind of numbers. So the day yesterday, BSE option trading volume was, oh, me, my family have vested interest in whatever I speak. My clients, me, everyone has positions in, and we keep trading stocks very aggressively. But I'm just giving an example. Like yesterday, BSE's volumes, if you look at data, the companies that we are holding, I'm surprised why my portfolio is not working. Actually, we should actually be up 30%, but it's not.
No, no, that's not. I like it.
I'm down 5%. Yeah, 4%.
Put it in there. No, but so you are now. So there is. You talked about BSC. I know that you had MCX. Is a. It fits that dominant leader criteria that you mentioned, right? So just give us, and you've already given the full disclaimer. So just top 5-6 positions for you now.
No, so the concept remains the same. Wherever there is strong market leadership, wherever there is strong growth happening in whichever sector, we will find, and with monopolies, with not monopolies, but market leaders, from wires and cables to...
So polycab, right?
I will now not say sectors because you judge the companies very fast. But in automobiles, we have plays. Automobile is doing so well. So those are places.
Okay, so let me put it this way: these companies that are on your radar, right? You know, what a lot of people do is they look at where they were trading sometime back and they look at the price damage, right? But sometimes if the environment has changed, I mean that I don't know if that is purely the right way to look at it. So is this the time? Are you fully deployed in everything you like already, or you're doing like you're sipping in?
So we have around 10% cash, but cash is not a position; it's an outcome for us. And if we get good stocks in this earnings season, we will add up. We don't have any problem. See, we want to be fully invested all the time. Like our goals are never to be like we've never been bearish on the markets. We're always bullish, and we keep navigating that. Who are the guys who fit into our criteria of growth, valuation, risk-reward ratios, and what is the expected returns? And based on that, we position size and predictability of that growth. And but we want high growth. We will not buy 10% growth, 5% growth. And even if we get it wrong also, we cut our losers. We have no problem, like zero emotions attached in cutting our losers.
The other big problem is the rupee. We're just chatting about it. The weakness out there is definitely hurting. What is the feedback you have been getting? And also the other problem, Amit, is the way people are rushing to bullion. A lot of people didn't talk about it 2 years ago, and suddenly there's a lot of talk, how much of gold you have, how much silver you got. That isn't too good news for the equity markets because the recency bias will play out there again.
Actually, Nigel, in near bottoms, you'll find only bad news. Rupee is going higher, gold is going higher, silver is going... I don't know the bottom. God knows. Only gods or very smart people can predict bottoms. I don't know, but data is showing that unless something big happens, we are near there. Now it can take 1 week, 15 days. Who knows? But data is saying that that numbers are not actually that bad. I'm not speaking about the big boys like Reliance, etc. That was poor. But if you look at the broad market numbers, I think this quarter has actually surprised my best case earning estimates as well.
Amit, now let me ask you for feedback from what you're hearing in the market. Not about what you're doing. So what is the mood like?
See, right now everyone wants to fold. Okay, everyone is trying to get an out. Everyone, see, the client. You mean the customers or my friends?
Everyone. Customers are clients. Clients are customers. I mean, everyone.
See, customers are normal. I don't see very large impact in our customer base, to be honest. We don't face any, because our customers are typically smart. They've seen cycles with us. Most of them have made decent amounts of money. Only the cohorts which don't make money, they are a little jittery. But that is only the last 6-8 months cohorts, I would say, would be jittery. But everyone else is adding the dip. Whereas the friends of mine, most of them, see, the broker guys are... they don't know what to do. Typically, right now, they are in freeze mode, but it's not working. Nothing what they are saying is working right. Whereas my friends, there may be smarter brokers out there. But the normal guys are typically fully invested, fully deployed. See, for most of the people who I speak to, for them it's जीना यहाँ, मरना यहाँ, इसके अलावा जाना कहाँ.
So it's not time to fold, Amit.
See, people, like, the stop losses are of course triggered for most of them, and it was triggered 1 year ago, and the ones who respected stop losses, they're doing okay. But even like us, if you take the last 15 months, we are flattish. Broadly will be down, 2%. But in 15 months, even median stocks are down 30%. 1 crore plus market.
Got that. Just one thing. Do you think, do you get a sense that, the only buyer in this market has been retail investors, right? Through mutual fund. There's on the other side of the equation, there is everything. Promoters who are selling, FIs, of course, are still selling, blocks, IPOs. It's a natural consequence when the market sours a little bit, that supply also starts to come off a little bit, right? I mean, are you starting to see it?
Money will go towards those 15-20 stocks. You're 100% right. And returns are not there. So in last 2 years, returns are weak. 1.5 year returns are weak. So money will move, but the broad market money will remain the same. And wherever there is earnings growth, wherever there is visibility, people will have to, once this sell-all phase stops, in the great good companies, will have a V-shape kind of recovery. Not V-shape exactly, but it'll move up very quickly. Right now, it is just looks like the last phase. And our last phase can stretch. But once this phase ends, you'll have a sharp move up.
Neck sticking out kind of situation, if I were to ask you, gun to the head, whatever you want to call it. Last phase will last how long? 2%, 3%, another? Are we already there? What's your sense?
Right now, I'll say that if you get it, even if you come, let's say today, someone comes in today, and in right stocks, I'm not speaking broad market. In right stocks, I think right now, in a decent enough portfolio, downside is 10%. Your upside can be 200-300% in the next 5 years, 7 years. I don't know. What upside, I don't know, but it can be a large upside because earnings are good. And market broadly, if you're in right earning stocks at decent enough valuations, you'll make it large. And people who've been in markets long enough, they have got super rich. You just have to stay invested. Of course,
got that. Got that. Amit, and
you have to manage risk also. Manage your risk and stay invested.
Amit, I think the song is not Jeena Yaha Manna, it's Jeetega, Jeetega. Let's pep it up. Come on, it's a Friday. And let's make India great again. Thanks a lot, Amit, for joining in, taking your word on board. And hopefully, as you said, the probability of us being closer to the oversold level is rather high. So hopefully that works out. But it's a good time to go across to Nimesh, who is joining us to tell us what he's picking up on D Street Chatter. Nimesh, what are they doing now? Are they, crying? What is it? They're okay, a little better today, looking for the weekend?
No, thumping.
No, thumping?
No, they are
That's
thumping.
Not possible. Tell us.
Nigel, again, so there is a lot of fear today and there is a lot of chatter doing the rounds that there is a large basket buying. I really don't know whether that's really the case. But I know for sure that there is an MOC sell basket at LNFI desk. So today's number could be quite crucial. I guess there is a bit of Friday factor result which is playing out. So a lot of leverage positions on a weekly basis which gets squared off has got squared off today. And the fact is that, every day off late you're seeing a lot of accidents in large cap names. Today is a classical case for Paytm. The stock is up 3% and now it's down 10%. So clearly, those kind of accidents are further nerving the investors' sentiment. So that's clearly playing out in many of these F&O names and in the broader market stocks. Having said that, a bit of buying into metal limbs again. So that's one space which clearly stands out, and there is a bit of interest. And from a flow perspective, the buying continues in the PSU bank stock. So I'll add a couple of names in my charter list, but purely from a flow perspective, is the metals and PSUs, especially the PSU banks, is where the interest seems to be. As I've been saying, for a meaningful upside now, the Nifty has to cross the earlier resistance of 25,450. That's the level to watch out for on the upside now. Only if that gets taken out, maybe you'll see a directional move on the upside. Till then, it can be a very range-bound and very painful. So that's the overall feedback. But barring that big fear or a rumor of a basket selling, I don't know whether there is really large selling from FIs today.
No, it's basket selling or buying? Because first you said buying, basket selling.
No. So there is a rumor of a large basket selling, Prashant, but that I don't have a number or a detail. Okay. But at least there is an MOC sell for sure. So last 30 minutes you are going to see that impact, which might play out in some individual names, because there is a MOC basket selling for sure at LDFI desk. Okay, well, 25.36, and I think we'll end almost 250 points lower, and 3 days of just reflection, right? And very, very tough times. But you have a few names, stocks, Nimesh, on your list. All based on buying or selling, Prashant. So the couple of names which stands out for me today is the two auto names, Hero MotoCorp as well as Eicher Motors. Though small, but there is delivery-based buying is what I understand from larger FIs in both those auto names today. Remember, even yesterday there was a feedback that there is aggressive buying in Ashok Leyland, and that continues, and that's showing up in the outperformance as well. So clearly looks like there is a bit of tilt towards the auto names from larger institutional desk. The second name is Polycab. Last week there was a sense that maybe the clean out trade is done with a domestic mutual fund. It looks like some fresh selling has resumed, and hence you're seeing a bit of pressure on that name as well in today's market. So it's down 3%, but largely on the back of sell flows. And the last is a couple of PSU banks where there's buying interest. So SBI and Union Bank, both stands out. I'll watch out for the delivery stats, but my sense is there's going to be delivery-based buying in both these names in today's market from large institutions.
Got it. Okay. All right, Nimesh. Thanks a lot for that. By the way, we have Sona BLW Precision's numbers that are at the bottom of your screen. The net profit is more or less flattish. The stock is down close to 2%, but most stocks actually are lower in this last 60 to around 90 minutes. I've not seen the revenue number, actually. Obviously, you have the promoter issue that's playing out there. There's a good revenue growth. 38% revenue growth on that sort of a base is pretty okay on a yearly basis. I don't know whether margins actually have seen some kind of dilution. We'll get a quick analysis on that going. Nagraj Sethi, Senior Technical Research Analyst at HDFC Securities, joins us on the show. Nagraj, give us two ideas at least.
Yeah, hi, Nigel. Yes, nothing has changed for the market last half an hour. Market is still showing some bounces and selling emerging at the higher levels. I'm continuing with the same two stocks what I have discussed a while ago. On the long side, there are certain sectors which are rotating and showing some outperformance in the benchmark, and that is the one. Union Bank is the one that what we can see is at the higher levels consolidation moment, kind of a bullish flag type pattern. Today made an attempt of upside breakout for around 174, 175 levels, consolidated from the higher levels. I think at the lower levels, buying could emerge for the stock price, and I'm continuing with the same upside target of around 182. One can look to buy at this point of time. Second one is sell side from capital goods segment, that is BHEL. BHEL has been in a continuous decline. It has moved below the 200-day EMA and showing low tops and bottoms on the chart. The overall scenario, overall chart pattern is looking weak, and more weakness is likely. Currently declined after my discussion, and my downside target remains there around 232 levels, and one can place a stop loss around 250.
All right, Nagraj, I want to ask you about a couple of these Adani Group stocks, because the group itself is getting pounded on some reports. Technically, how is it looking? Adani Enterprises is now down close to around 10%. And Adani Ports as well is down close to around 7%. We have seen in the past when there's some negative news flow, sometimes, the ones with better assets, ports, Ambuja Cements, ACC, they normally see a bit of a bounce. What's your reading, particularly in Adani Ports and Adani Enterprises? Because they are part of the Nifty.
Yeah, both the stocks are not looking good the way that it has declined in today's session. And it was actually these stocks were underperforming recently, and the decline is indicating a decisive downside breakout. And technically, whenever we see such kind of a breakout, we see that bears are heavy weighing high on these counters. I think some more weakness is likely, or at least consolidation before showing any bounce from the lower levels.
Yeah. So this is looking pretty weak all across. Thanks very much, Nagraj, for that. I think we've got about 14 minutes to go for close. I just want to quickly pull up the rupee, dollar rupee once again and see what's happening there. If things are a bit steadier or we are once again knocking at those levels. Well, there's hardly anything, right? It's relentless, 91.91. It gets shored up a little bit, pushed back a little bit, and then it comes right back at the highs of the day. It's not quite at the highs of the day, but the cross is almost there. It's a 28 paisa move. So just been like a one-way week in as far as the currency is concerned. Market breadth also perhaps 3:1, 800 up and about 2,400 stocks which are lower right now. So it's a pretty washout kind of a screen out there. So we're at 25,050 on the index, but broader market damage much more. Take a break. We're back. There is a Cipla call which is on. We'll try and cut across to that. Mayuresh will be with us as well. Stay tuned.
There's a Cipla call that's on and Ekta's on it. Let's cut across to the call.
Ekta, we can't hear you.
Should we move to the next question? Maybe come back
I think we go to the next question. Next up, we have Satviki Sanjay from Bloomberg.
Ekta asks that question. 9 minutes to go for market closing, by the way. Mayuresh Joshi is with us with a quick sense of what's happening. Mayuresh, what are you picking up? It's a pretty depressing way to wrap up the week and go into a 3-day weekend.
Oh, absolutely, Prashant. I think there was some element of hope yesterday. But again, I think the comments that are coming on the geopolitical front is not helping the markets at all. And therefore, I think the volatility in the markets might just sustain unless we have some element of stability when it comes to the global news.
Yeah, but but it's not as if there's been any fresh negative, right? But the market continues to collapse, Mayuresh. That's the other point. And you can make that same point with regards to what's happening or not happening in the dollar. The dollar is not stronger. It's very much the rupee. And by the way, actually, dollar is falling against most other currencies, not just against the rupee. So I'm not sure how much of this is, can be blamed on the global shores, and whether this is a bit of a local issue in that sense, Mayuresh.
No, again, I think a lot of emerging economies are feeling the brunt in terms of how the currencies are behaving at this juncture. But I think we are reacting to three factors in general. I think one in terms of the geopolitics, two in terms of the US trade deal. When is that going to come through? I think that is a bigger issue. And some news related to the Adani group that is now again sprung up, which has again created some element of surprise for the markets. So I think a combination of these news, specifically the first one, is creating that impact. But that can get compensated. The EU trade deal, which is expected to happen, if that comes through, I think that is going to be a huge positive. And that might just offset some of the pain that we'll probably see in terms of the lingering trade deal with the US not probably happening.
All right. Mayuresh, the good news is for the next 3 days, there's not going to be any FI selling. But I'll tell you what, this market is providing select opportunities. Good results actually are being appreciated. You look at Bajaj Consumer, well, that stock has done very, very well. I know there's not been growth for long, but that's done well. And just to pull up a few stocks before we go into a break, Shobha, pull up the intraday chart, big spike up on that stock. Go Digit, another stock that's seen a sharp uptake in the last few minutes. I think that as well should come up for you on the screen. So select stocks, well, they are doing a thing of their own, particularly in the last few minutes. I think RA Drugs, no, that's a smaller cap out there. We can keep that out of the way. But otherwise, few stocks are doing well. Ramco is another stock that spiked up. Ramco Industries, not Ramco Cements. That is well up close to around 4.5%. Slip in a short break, come back. We'll continue tracking stocks and we'll ask Mayuresh about his opinion as well. Welcome back. Well, markets continue to struggle. The good news is there's just 4 minutes to go before we wind down. Mayuresh, we've got two big earnings reactions from the pharma pack. Dr. Reddy's on the positive end, while Cipla is the one that's actually seeing some selling, and we're getting the flashes up for you on the screen. But from the pharma pack, what do you like?
Nigel, I think Dr. Reddy's numbers were encouraging, to say the least. I think the margins that they posted were decent at 23.5%. Their annualized ROC stands at 20.5%. Net cash is close to 3,000 odd crores. The biosimilars that they're expected to launch, specifically for the US market, they've already done a filing thereof, which can be a huge product going forward as well. The number of FTFs that they've got is decent as well. That's probably the advanced key pipeline products that they probably got. So Reddy's probably just stood out as we speak. Cipla, I think, disappointing in terms of how the margin performance largely has been. But two things that I would like to observe on the con call, which is starting in a few minutes. They've paid 1,100 odd crores to Novartis as license fees, and they have provided 276 crores for labor, which might be a one-off. And therefore, if you exclude these two one-offs, which account for almost 1,400 odd crore, that can have a positive impact. But generally, the margin deterioration which took place, why is that is something to be watched out for. So I think no specific preferences, but out of the two, I think Dr. Reddy definitely stood out.
You know, at the end of, as we wrap up, Amit Jeswani was with us and he was saying that even on a day, I was asking him whether, he was saying this is the last phase, right, in terms of pain, and we'll see. So even on a day like today, high growth companies, etc., is not bad levels in that sense. Anything on your radar as absolute picks from here, if I can ask you?
So Nestle India, probably Prashant, is one of the picks that stand out, and we've added that to our swing portfolios. Our sense is that numbers in Q2 were strong. We are expecting a good trend to probably continue for Nestle India across its product categories. Input costs have largely remained benign, and therefore both gross and EBITDA margins should have significant signs of stability as we head into Q3 and even Q4. So I think Nestle India probably remains one of our bets that we've recently added in the swing portfolios.
Okay. All right. Got that, Mayuresh. Thanks a lot for joining in, Mayuresh. We've got just a minute to go before we wind down, so let's do exactly that. Another difficult day of trade. The problem today, yet again, was the Indian rupee. Once that went for a bit of a slippy slide, the markets as well did do a bit of a nosedive. The Adani Group, that got smacked today. All the Adani Group stocks were down in trade. Adani Enterprises, Adani Ports, both of them down between 7 to around 10%. Adani Power as well did see some selling. And Adani Green, well, it had bright red actually today. So all those stocks did see some selling. Eternal continues its losing ways. The numbers look good. Uncertainty at the top. A bit of a transition phase out there. Remember, the stock, the last earnings was around 370 rupees, from 370 to around 260. We're talking about a frontline Nifty stock. That's the magnitude of correction that we have seen. IndiGlobe Aviation as well, the largest airline here in India by market share. Unfortunately, that one as well is down close to around 4%, and now it's corrected more than 20% from the top. Geo Financial was down 3.5%. Cipla as well was down 3.5%. What did well? Dr. Reddy's, that was the stock to hide in, was up 2%. Tech Mahindra as well was up close to around 1%. From the broader markets, plenty of stocks were doing a jig of their own. Well, to just name a few of the stocks on the downside. First, you had the Adani Group stocks, obviously. Paytm was down close to 10%. Syngene trimming their guidance down 8.5%. Premium Energies, numbers didn't look good. The street was worried out there. And PNB Housing Finance, the stock was down 8% today. Some brokerages pointed out that valuations were attractive, but the market's not looking at that. Stock down another 6% today. And the real estate names, Lodha,